Yo guys, what's going on? Alex Maycumber here. A lot of you guys have commented on my story and have asked about how I'm going to make $200,000 when our second baby girl is due next month. And want to come on here real quick and tell you guys about what I'm planning on doing. But first, I want to say you should never take advice from me or anyone that's preaching on Instagram. I'm not a professional, and definitely do your own research and seek the advice of professionals. But I really just want to come on here because even my most financial savvy people, friends, are surprised when I tell them about what I'm doing, and it blows my mind how little people know about the HSA. So what is the HSA? It's a health savings account, and it's essentially, you can think of it like a almost like an IRA, but specifically for medical. People know it as a medical expense account, and really what it's for is typically people save money every year into this account, into the HSA, and then they pay for the medical payments from it. I'm not going to dig into the details of it because you can Google it, and there's a ton of information on HSAs out there. But essentially, all you have to know is families can save up to $7,000 for 2019, and $7,100. It goes up a little bit in 2020, and every year you can save that, and then it actually can save and invest into stocks. So you can actually tie it to a brokerage, and that $7,000 a year can actually, just like an IRA, get invested in S&P 500, international funds, the whole deal. So, but the question you're probably wondering is, like, how the heck is a baby being born? How the heck are you going to earn $200,000? So first I got to answer, like, why the HSA, especially if you don't know, and if you do know, you can fast forward 30 seconds, but it's known for being the only tax vehicle that has it's tax-free in three different areas. It's tax-free on the income you put in, so it's tax-free income. I'm sorry, I'm saying the wrong word. It's tax deductible. All the money you put into it, that's $7,000. You actually deduct off your income taxes for the year, just like a traditional IRA or a traditional 401k, like you guys know today. Number two, the money grows tax free. So just like a traditional IRA or just like a traditional 401k, it grows tax free. So if you put in, $10,000 and that grows into $100,000, you're not paying. You withdraw $10,000 from the income in the first year, and then that growth from $10,000 all the way to $100,000 is tax free while it's in the account. And then number three, this is where it gets crazy. HSAs are tax-free withdrawals. So if it grows all the way to $100,000, and then you have a big $100,000 medical expense, boom, you can withdraw that $100,000 and not pay any taxes on any of the growth. And that's different than a traditional IRA, because if you withdraw that $100,000, you pay the taxes on the $100,000. So, but the thing that people don't know, and this is something that is, I don't know why people don't know it, but my HSA provider promotes it. They call it HSA Save It, but that's just the way they call it. It's essentially, you credit yourself if you pay for medical expenses out of pocket. So, for example, a typical baby, I think, is about $10,000 when all is said and done. Like, I'm talking about, like, all the medical bills you got to do, all the visits leading up, the 9 months of pregnancy, the postpartum visits, like the whole thing. You're probably looking at about $10,000 over the first year. And so you have two choices. If you have an HSA with $10,000 in it, you can either pay for the money out of your HSA, and that essentially means you're withdrawing your stocks, $10,000 worth of stocks, and paying for your medical, which is totally fine to do. That's what most people do. Or if you have $10,000 in cash outside the HSA, you can use that $10,000 and pay for the baby. So what does that mean? That means your $10,000 in the HSA stays in the HSA, and it continues to grow tax free all the way as long as you want. And so, for example, I use my example. I said $200,000. If, like, I'm 30, 31, by the time I'm 60, that $10,000, if it gets 10%, will be worth $198,000. If I wait until I'm 70, it'll be worth $537,000. And so you can imagine, like, that's how crazy it is if you just have the cash outside. And the last piece of the HSA that blows everyone's mind, and again, I just learned all this stuff probably a year or two ago, and everyone I talk to has no idea. Even the most financial savvy, non-professionals out there, the finance nerds, the other amateur finance nerds like myself, it's a little known fact, but as soon as you turn 65, your HSA essentially it completely converts into a traditional IRA. Not technically, it's not called an IRA, but you can now withdraw as soon as you turn 65. You can now withdraw funds from your HSA, even though they're not medical expenses. This is right out of IRS.gov. So, for example, in my example, I've saved my 10 grand for my baby. I wait until I'm 61, let's say 65. By then, it'll be over 200 grand in that account, just from that one baby. I got 200 grand in that account. I can now withdraw that even if I don't have a medical expense, okay? And that's because I'm 65. So I know I'm throwing a lot of benefits, but tax deduction when you put it in. You don't pay taxes on the earnings while it's in the account. You withdraw it tax-free when it's for medical expenses. When you turn 65, it essentially becomes a traditional IRA. And then and then the other benefit I mentioned was the credit. That 10 grand I mentioned, let's say I pay out of cash, I have a baby, or Kelsey has a baby, 10 grand in my account, my HSA, I have 10 grand in cash. I decide to use the cash for the baby so that the stocks keep growing. Let's say I can't make it until I'm 65. Let's say 10 years from now I'm 40, and something happens, like we want a new boat, or we're starting a new business, or whatever. I want that 10 grand back now. I originally had the money. Now I want that 10 grand back. I'm not 65 yet, but because, and this is going back to the originally when I said the HSA save it, the credit thing, because I spent 10 grand on a medical expense back when I was 31, when I'm 41, or any time when I'm 32, and like literally a month from now, I can go back to my HSA and say I'm withdrawing 10 grand, and I don't get the penalty fee, and I don't get the taxes on that 10 grand because I already paid for a medical expense with my out-of-pocket expenses. So if you're a finance nerd like I am, you must be geeking out. If you've made it this far in the video, you would be geeking out right now, because the HSAs are hands down the greatest thing in the world. And I'm telling everybody about it. I'm not even I don't make money on this stuff. I have nothing to do with finance. But I just felt like I had to come on here because people have no idea. And if 5 people listen to this video and learn about it, and become millionaires because they had an HSA and a few babies, I'd be happy. So anyways, if you guys like this video, let me know. I'm probably not going to do a lot more of them because I'm not a finance guy, but when I find these little things, these little quirks, I'm going to be, I'll come on here and let you guys know. But anyways, yeah, shoot me a message, let me know. I don't know if you can like these videos, but if you can, just throw me a like and a comment. Tell me what you liked and what you didn't like, and thanks guys, thanks for watching.